Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And in today's video, we're going to review a brand new covered call ETF on the Canadian stock market, UMAX. That is the ticker symbol. Of course, I'm talking about the Hamilton Utilities Yield Maximizer ETF. Yield Maximizer is actually in the name of the ETF. Pretty cool. That always gets my attention right away. And another thing that got my attention is the initial target yield of 13% plus. How is it possible to get 13% plus yield on utility stocks? Well, utility sector or utility stocks in general are typically they're very boring. They don't get much attention, and for good reason, because it's a very defensive sector. But what a lot of people forget is that they tend to be very profitable companies with pretty high dividend yields themselves. So of course, utility companies are things like power generation, telecommunication companies, pipelines, even railroads. So these are big, more boring, well-established, profitable companies that have high dividend yields. But how do we get, to 4% yield, 4.5% yield to 13% plus? We'll figure it out in this review video. And after that, we'll also compare this covered call utilities ETF to some other competitors or other covered call utility ETFs on the Canadian stock market. So let's get going. All right, everyone, let's check out UMAX in detail. We're going to check out the basic information, the holdings, the covered call strategy, initial stock price and yield, as well as taxes. We'll compare to other utilities covered call ETFs on the Canadian market. So we'll look at all those things. So let's start with the basic information. So right there on the website here, you have initial target yield of 13% plus. We'll get back to that in a second. So what is this ETF? Who is this ETF designed for? Well, for investors who want higher monthly income, a blue chip Canadian utilities exposure. So that right off the bat tells me this is going to be all Canadian companies. Tax efficient distributions. Why tax efficient? What makes it tax efficient? We'll also discuss that. And of course, like a typical cover call strategy, you'll always see a line like this: reduce volatility because of the option strategy. Remember, cover call strategies reduces your volatility. So let's start with what's inside this ETF first. It's always the first thing you got to check, guys. I mean, if you're investing in an ETF, what are the stocks inside this ETF? And here they are. Here, there's 13 companies. You'll probably recognize all of them if you're Canadian. All the top big utilities companies in Canada. So Bell, that's a telecom, TC Energy, Enbridge Pipeline Company, Rogers, another telecom, Fortis, Emera, electricity generation, Pembina is the another pipeline. So you have literally the three biggest pipelines in Canada: Enbridge, TC Energy, and Pembina. You have Waste Connections, which is like garbage disposal, recycling disposal. And then you also have two railroads, CNR and CP. Canadian National, Canadian Pacific. You also have TELUS, of course. So you basically have the three top biggest telecom companies in Bell, TELUS, and Rogers. And you also have a couple of other electricity generation companies, Hydro One and Northland Power. So very profitable blue chip utilities companies. They all have a dividend, by the way. If you're wondering, what is the approximate dividend yield, just the dividends on this portfolio? Well, let's check it out together. So I have all the companies here. You see the dividend yields on the right. I apologize if it's a bit small, but you see here Enbridge. Right now, just the Enbridge stock is 7.10 or 7% yield. And keep in mind, yields could change every day. I'm filming this on June the 12th. TRP, which is the other pipeline, at 6.83. PPL, 6.4. Let's do the telecoms. TELUS, 5.71. Bell is 6.29. Rogers 3.48. You have the railroads a little bit less at 2% and 0.75%. Waste Connections at 0.75, so a little bit smaller there. Then you have all the electricity companies like Fortis, Hydro One. So you're looking at 3.92 for Fortis, 3.15 for Hydro One, NPI 4.24, Emera 4.96. So the approximate yield, I did the calculation today for you guys, is about 4.20%. So just the dividend yield of these companies is approximately, or the average is 4.20. So to get to 13% plus, you really need about 9.5% yield from those covered calls. And let's talk about the covered call strategy, because this is where it's very unique here. So as you could see here, they say, or they're comparing UMAX to other utility covered call ETFs. And they're saying here that many covered call ETFs, and it's true, typically they write 30% to 50% of the portfolio, but out of the money calls, which means they generate less premiums or less aggressive calls. But UMAX is able to provide higher income with a dynamic covered call strategy. So this is an active covered call strategy, currently writing options on 50% of the portfolio. So that's the portfolio coverage. You're only writing calls on half the portfolio, which means the other half, or 50% of this portfolio, will completely participate in what the stocks do. So if Amera goes up 2%, you participate in half of that. So it should go up 1% in this portfolio, because the calls are at the money here, right? So 50% coverage at the money call. So they're more aggressive calls, which means a lot higher premiums, and that is basically how you're getting that 13% plus yield. It's actually it's the same strategy or option strategy to UMAX. So UMAX is basically the same covered call strategy on the Canadian financials, and UMAX is the same covered call strategy on the utility. So that is how we're going to get such high, enormous yield. And if you look at the first distribution, they already estimated it's going to be about 17.5 cents a month. Keep in mind, this could change. It's just an estimate, which is about $2.10 annually. So my guess, I'm just guessing here, is the initial stock price is going to be somewhere around $16. Again, I'm filming this on June the 12th. By the time this video comes out, the ETF will probably already started trading, but it's not trading right now at the time of the video. So now we know what kind of stocks are in there, what kind of dividend yields the stocks baseline give you. The covered call strategy, we covered that, initial price and yield. Now let's talk just quickly about the tax efficient distributions. Why do they say that? Well, as we know, first of all, it's all Canadian companies, and this is a big difference between its competitors, which we'll check out in a second. So all Canadian companies, which means you will not get any foreign income. You will get eligible dividends. So all these companies here are Canadian listed. So if you have UMAX in a non-registered account or a cash account, you could expect a portion of the distribution to be eligible dividends, and the rest are going to be covered call premiums, which we know are taxed as capital gains. So that's why they say tax efficient distributions. All I expect here with this ETF in terms of the classification of the dividends or distributions is eligible Canadian dividends, capital gains, and probably a little bit of ROC, of course, which is just normal for most ETFs out there, income oriented ETFs. So what about its competitors? So there's quite a few, there's 3 covered call utilities ETFs on the Canadian market. We'll take a look at the 2 biggest one. My opinion, this is its main competitor for sure, ZWU, the BMO covered call utilities ETFs. Very, very big, almost $2 billion in assets. The yield is about 7.71. Keep in mind, the covered call strategy is much less aggressive, right? As we know, BMO takes a systematic approach. They do up to 50% coverage, but all out of the money calls. So you're going to expect a lot less yield. And they actually reduced the monthly distribution, by the way, from 8 cents to 7 cents. And one thing also I want to show you is that unlike UMAX, only 65% are going to be Canadian companies. The rest is in the United States. So you got to expect some foreign income with ZWU here. So that's a major difference. Another competitor would be the Harvest Equal Weight Global Utilities Income ETF. Very popular, HUTL. So a high yield of 8.17%. As we know, again, these are typically out of the money calls, and like we know, Harvest only does up to 33% coverage. But again, if we look at the portfolio, especially the geographic allocation, you see that only 22% or about 23% is going to be Canadian companies. The rest are going to be outside of Canada. So probably not as tax efficient distributions, but a lot of the same companies in here. But again, only 22.8% in Canada. So that's really the biggest difference I see with the other ones. UMAX is all Canadian, which is going to give you more tax efficient distributions. And also the covered call strategy is different. It's a little bit more aggressive. It is 50%. So you do participate in the upside of 50% of the portfolio, but they're at the money call. So you literally give up the entire other 50%. So, but that comes with higher yield, of course. The more upside you sacrifice, the more yield you're going to get. So this is definitely a yield oriented product, everyone, just like HMAX. Yield maximizer is actually in the name of the fund. When it comes to the management fee, it's going to be 65 basis points. The MER, we won't really know until after a year, but I did speak to Hamilton about it to try to get you guys an MER, and they said it's not going to go over 0.8. So I expect it's going to be close to 0.8, probably maybe a little bit less. So very typical management fee and MER for a covered call, actively managed covered call product. So another thing I want to tell you about, as you know, I already mentioned it, that HMAX is very, very similar. They do the same covered call strategy on the Canadian banks, however. And another question I know I'm going to get is Hamilton's all-in-one HDIV, which has a lot of Canadian stuff because this tries to replicate the S&P TSX 60. If we scroll down, you'll see that ZWU is a utilities ETF, which we just saw in HDIV. So I can't say for sure, but my guess is that they will probably replace ZWU with UMAX, which will lower HDIV's fees because UMAX is, a Hamilton product, kind of like they replaced ZWB by HMAX. So very, very interesting product. I think this is going to be a great product for income-oriented investors that want a defensive, more stable sector like the utility sector. And just in case, it'll probably be in HDIV. Don't quote me on that. I'm not 100% sure. I can only guess here as well, which is also good news if you ask me, or for holders of HDIV, because we'll probably get, HDIV will probably generate more yield. And another thing I want you to remember, just like in HDIV where there's HMAX, which is the yield maximizer, so it's the income product, and there's also HFIN, which is more the growth product. Hamilton has a growth or total return product from utilities. If you don't want those covered calls, they have HUTS. So HUTS is Hamilton Enhanced Utilities ETF. There's no covered calls here. So if you're more of a total return growth investor and you think these utilities companies are going to grow over time, you might be better off with HUTS, but you're definitely not going to get 13% yield. You'll get about 7%. Because HUTS has, high dividend yield of about 4.5, and there's 25% leverage in HUTS. So that's why it's called the Hamilton Enhanced Utilities ETF. So I'm curious to see what they do with HDIV. Are they going to add both UMAX and HUTS to replace ZWU, or are they just going to replace it with UMAX? I guess we'll have to see what happens. But there you go. That is the overview and review of UMAX. Tell me what you guys think. Do you have any questions or concerns about it? Let me know in the comment section below. And I do have a very special announcement, by the way. So in case you didn't know, Nick Picard is actually has joined Hamilton ETFs as the chief options strategist. And in case you didn't know or haven't seen the video, I actually did a Q&A with Nick Picard because he used to work at Horizons to manage their covered call ETF. So he's now working with Hamilton ETF. So we are planning, it's in the works, to schedule a Q&A with Nick Picard where we'll talk all about covered call ETFs, covered call strategies, etc., etc. So I can't wait for that. Stay tuned for that Q&A. I'm very excited. Hopefully more, Hamilton creates more and more now that they have their own covered call guy. Covered call ETFs, now they have HMAX, they have UMAX. Hopefully they come out with maybe a healthcare one, a technology one. We'll have to wait and see. Very exciting time to be an income investor, everyone. So yeah, see you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the Ultimate DIY Investing Package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades, and PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram where you could follow us or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.